Hello and welcome. We are at the NASSCOM National Technology and Leadership Forum right here in Mumbai, and I have with me Mr. Kishor Patil of KPIT Technologies. Mr. Patil, I appreciate you joining us at ET Now today. Really a pleasure. I wanted to begin by asking you, how has the demand environment changed, if at all, since the last time we spoke? Anything which you can incrementally talk to us about over the last 3 months? How have the client discussions moved?
I think I would just like to reiterate what we said. I think the environment looks good to us, and in the area in which we are working, I think it's not a short-term trend, it's a medium-term trend, and we see that the client spending is there, if not going up a bit in the areas, in the new technology areas. That's where we are focusing on. So I see a reasonable and a stable in a demand environment for this area, and specifically in the new technology areas and software-defined vehicles, I see the trend to continue for next 3-4 years.
Well, that's the big trend which is there in the automotive industry, right? ADAS, etc., and that's why you stand to gain the maximum. And that was quite visible in the recent deal that you signed with Renault as well. Are there many more in the pipeline like that? Because you did hint about that in one of your investor calls.
I think I have said it time and again. It's our normal business. Actually, some clients are not really announcing it. Some clients are open to announce it, and as you see in the tech and R&D or any other sector, clients are not really keen on announcing any such deals for multiple reasons. So I'm sure, I mean, this is our normal business, and we are signing such deals very often. But as I had mentioned, you will hear something in next few months.
Okay, so what I understand is deal signings are not getting delayed at the moment. It's only whether the announcements happen or not. The deal pipeline and signings are
very strong, very strong. The environment is very strong. Yeah.
Sure. So having said that, you have been delivering what, 20% plus organic constant currency growth over the last few quarters. Do you expect that to continue in the coming, let's say, 4 to 5 quarters as well?
So, I mean, I'll just focus on this year first. Sure. I think we have said that we'll grow more than 32% in the year, so which is, we have upgraded our guidance couple of times. We see good business environment, and just in the month of April, we will probably give some outlook for the next years. But as I said, overall, the demand environment looks pretty robust.
And your inorganic acquisitions and scale-up is also something which has been supporting your revenue growth, right? Technica acquisition, for instance, has been doing quite well. Is there anything else in the pipeline? And with Technica and the other recent acquisitions, how has been the scale-up?
I think the key point for KPIT, reason for acquiring some of these entities to really leverage them quickly, and that's what we are focusing on right now. So I think this year is the year of integration and leveraging it to further the growth. I think that's how I would put it.
So, okay, you're gonna digest what you have bitten so
far,
not maybe looking at making some aggressive acquisitions at this point of time. But since we were talking about the automotive industry, which is of course your key focus area, wanted to understand, is there any sort of let's say delay in decision making or any sort of wait and watch kind of mood? Because a lot of those industries are focused in Europe, and that is where we are seeing the maximum impact of the global headwinds.
So the first thing is, I think KPIT as a company is probably one of the most balanced revenue across the region. So US is strong, Europe is strong, and Asia is strong too. Europe naturally has become little stronger because of some of the acquisitions we did, but we see a very strong growth from Asia coming in, and supported by US. So I think we see a reasonable demand environment across, and naturally in some time, like last 3 years, 4 years, Europe has been growing very fast. We expect it to continue, but I think maybe Asia will pick up soon.
Okay, let's see whether Asia picks up soon or not. But demand side, you're saying there are no challenges, but supply side is very crucial for you, right? Because you need a specific set of skills for your hires as well. How's the supply side situation panning out? Because attrition was, as it is, not very high for you compared to the industry. But overall, what's the headcount addition plan for the year? What's the attrition rate looking like?
Maybe I will say that it's quite steady. I think we see slowly but steadily attrition going down. So that is one part. I think what we are focusing on is now quality of hires more and more. That is what our focus is. I think overall the demand environment is good and the supply environment is stabilizing. That's what I would say.
So would that mean if demand is good and supply stabilizing, that margins will improve from here on? Because you have been in the investment mode, I know, but from 18%, is there a case to be made to move to, let's say, 20% when it comes to your margin front?
I have said that we will do that over a few years. I have not given a specific time. It is basically because what we are focusing on more is which are the growth areas we need to focus in order to continue. We are in that growth environment. We have to hire people earlier. We have to train, because for all reasons, I think last 3-4 years engineering schools were more virtual. So I think you have to put in a little more time in bringing the competence up, I think so.
Okay.
I think there is a lot of investments we have to make, specifically in our key domain areas. It's a deeper domain areas, so I think that's why it takes a bit of a time. But to your point, margins will improve, but over a period. I don't want to say anything right now.
Okay, so I won't put a gun to your head and ask you about a specific timeline, but just to wrap it up, wanted to get a bit of a medium-term perspective. Yes, you talked about 30% plus growth in FY23, but what about the next 3 to 5 years? Could you maintain this kind of growth rate, given the scale also will come into the picture, right?
Couple of years, we have said. I mean, I just talk about what I have to say in a medium term. So in the medium term, we said that 20% plus growth is quite possible, and the demand environment is good. KPIT is very well positioned.
And is there anything which is concerning you at this point of time? Anything on the watch list that makes you a bit worried?
I think it is all about quality of hire, how we can improve that, and how we can deliver. I think all our focus is on execution.
And that hiring will happen largely from India?
It's happening across globally, because wherever we are close to clients, we have to hire in that, as well as we have opened many centers in the past in the same time zone. Last year we had Spain, Tunisia, Egypt, Brazil we are scaling, Canada we are scaling, Thailand is there, Vietnam is there, China of course not grown up. So I think they are doing it everywhere so that we can get the right kind of a talent.
Okay, on that note, we'll wrap up the conversation. Thank you, Mr. Patil, for making time and speaking with us. Thank you.